Hello and welcome to Stock Daily. It is currently 11:45 p.m. Eastern Time on Thursday, July 31st. We have a lot to cover in today's market update. Just yesterday, Microsoft and Meta released strong earnings reports that exceeded expectations and pushed the major indices to new record highs. However, those gains were completely erased today. All four major U.S. indices opened higher but closed significantly lower. Among the S&P 500 components, 360 stocks declined while only 140 advanced. Technology stocks, particularly in the semiconductor space, were hit the hardest. The Philadelphia Semiconductor Index, which tracks 30 major chip stocks, saw 29 of its components fall, with only one posting a gain. We'll explore whether this signals a shift in capital allocation or if it's just a temporary move. A clearer picture may emerge tomorrow. We'll also look at key earnings from Amazon and Apple, as well as developments with NVIDIA and AMD. In addition, we'll share updates on a new IPO that saw a major price surge today. Turning to trade news, the U.S. has finalized several agreements with global partners. As of midnight tonight, tariffs will go into effect. The agreement with Mexico includes a 90-day extension of current tariffs. For countries that have not reached agreements, the U.S. will impose tariffs according to the previously proposed April 2nd rates. Additionally, after the close of markets today, the U.S. announced it will increase tariffs on Canadian goods from 25% to 35%. In the pharmaceutical industry, 17 drug makers have agreed to extend most favored nation pricing to Medicaid, which is expected to help lower drug prices for American consumers. From an economic data standpoint, inflation came in hotter than expected. The core personal consumption expenditures index for June rose 2.8%, slightly above the forecasted 2.7%. Year over year, overall PCE climbed 5.6%, surpassing both expectations and the prior reading of 2.5%. Meanwhile, the labor market remains steady. Initial jobless claims for the week ending July 26th rose by just 1,000 to 218,000. Continuing claims remained unchanged at 1.946 million. Together, these figures suggest there's little immediate justification for a rapid or significant interest rate cut by the Federal Reserve. Markets are now pricing in fewer than 2 rate cuts for the rest of the year. Tomorrow's non-farm payroll report could be a pivotal moment. Expectations are for a gain of 110,000 jobs in July, down from 147,000 in June, but still above the Fed's cautionary threshold of 80,000 to 100,000. The unemployment rate is projected to fall to 10.2% from 10.4%, still below the Fed's year-end target of 4.05%. Now let's take a quick look at the IPO that's been making headlines today. We haven't done an in-depth analysis of the company's business model or growth potential, but here are the basics. The stock was issued at $33 and opened at $85. It then surged as high as $143, marking a 257% increase from its IPO price. Because this is a brand new stock, there's no historical data to analyze. Investors should carefully weigh the risk and reward before jumping in. Let's move on to earnings, starting with Amazon. Despite beating expectations on both earnings and revenue, the stock fell 6%. Second quarter earnings per share came in at $1.68, beating the consensus estimate of $1.33. Total revenue reached $28.1 billion, also beating expectations. AWS, Amazon's cloud segment, grew by 10.7% to $31.1 billion, accounting for 18% of total revenue, but contributing more than half of operating profit. However, AWS's operating margin declined from 35.5% last year to 32.9%, its lowest level since 2023. Amazon's CFO pointed to increased stock-based compensation and higher capital expenditures as reasons for the margin decline. Amazon spent $56.1 billion in capital expenditures during the first half of this year, with plans to spend another $61 billion in the second half. That's significantly more than analysts had expected. Investors were also disappointed by the company's forward guidance. Management projected third-quarter revenue between $155.1 and $162.5 billion, well below the expected $194.2 billion. Using a price-to-earnings ratio of 30, The upper estimate for Amazon stock in 2025 is $258 and $291 for 2026. On the lower end, based on industry growth rates, the 2025 forecast ranges from $125 to $188, with 2026 ranging from $145 to $218. Investors can use these estimates to assess their own risk tolerance and buying opportunities. Now let's turn to Apple. The company also posted strong results. Earnings per share came in at $1.57, beating the estimate of $1.43. Revenue totaled $94.1 billion, exceeding the forecast of $89.3 billion. iPhone revenue rose to $44.8 billion, up 13% year-over-year. Mac revenue reached $10.5 billion, also beating expectations. However, iPad revenue fell to $6.5 billion, below the projected $7 billion, and wearables, home, and accessories revenue dropped to $8.1 billion, missing the $8.8 billion estimate. Greater China was a bright spot, generating $15.37 billion in revenue, slightly above expectations. Apple's CEO attributed this to both government subsidies and pre-tariff consumer demand. However, Apple is closing its Dalian retail store in China on August 9th. This is the first Apple Store closure in China since the company entered the market in 2008. Apple now has 41 stores in China, making up around 10% of its global total. The company is also accelerating its supply chain shift to India, which has become the top smartphone exporter to the US, surpassing China and Vietnam. Apple did not announce a new share buyback program, opting to continue with its existing plan. With limited upside, the stock's target range is around $220 to $236. The stronger support levels are between $168 and $198. If you're bullish on Apple's long-term recovery, a buying opportunity may emerge below $198. If you're not confident in Apple's growth trajectory, other opportunities may be more attractive. We also want to provide quick updates on other names. Coinbase reported disappointing results. Trading revenue declined 26% year-over-year, and the stock fell 9% in after-hours trading to $34.1. Support is around $33, with the next level down at $27. Robinhood, on the other hand, posted stronger results with earnings of 42 cents per share and nearly $1 billion in revenue. However, its stock performance remains heavily tied to market sentiment and trading volumes. Technical support sits at $98 to $102, and a drop below 90 would be concerning. Turning to NVIDIA and AMD, NVIDIA faced some headline risk today. China's Cyberspace Administration raised concerns about potential security vulnerabilities in NVIDIA's H20 chips and has requested an official explanation. Despite the news, NVIDIA's stock only declined 0.78% and remains technically strong. Support levels are between $169 and $174. AMD also fell slightly, with shares dipping to $171. Key support sits at $170 and then at $163. Neither stock has broken critical support levels, so for now, the uptrend remains intact. To wrap up, today's sell-off appears to be driven by month-end rebalancing and pension fund adjustments. These flows contributed to the market's high open and weak close. Tomorrow is options expiration, which should provide more insight into market direction. If the market opens lower and continues to fall, that may indicate a broader sell-off. But if it recovers to the midpoint of today's range or higher, it would suggest ongoing market strength. Either way, tomorrow's session will be important. That concludes today's market wrap-up. Thank you for tuning in to Stock Daily.